Hello to you and welcome along to the How to Trade Weekly Forecast. We're live in the trading room and live on YouTube. I hope you've had a good trading week as we get ready and look forward to all of the key market moving events for the coming week forward. Now, I'm joined with our regular coaches, Shane Veneer and Connor Woods. But before we get into next week, guys, we're just coming off the back of a really interesting non-farm payroll. But the big news in the retail space is what's been happening in one of the key leading prop firms at the moment. Connor, just talk us through the statement of exactly what's been going on with that.
Yes, hello to you, Nick, Shane, and everyone watching on YouTube and in the room. Yeah, but big news really. It's hard to avoid it. The popularity of proprietary firm trading, and one of the most popular ones, My Forex Funds, released a statement last night. I'll just read a little bit of the statement, but essentially they've frozen everyone's accounts, and they said that yesterday we learned without prior notice or discussion, provincial securities regulator in Canada and the commodities regulator in the United States have issued orders preventing us from trading securities or accessing funds in our bank accounts. And until that's happened, essentially the business is frozen. There is a court case on the 11th of September in the US and another hearing later in Canada to see if this could be resolved, but it doesn't really give good signs to the prop firm industry as a whole, especially My Forex Funds, who clearly are freezing everyone's accounts.
Yeah, I mean, it's not good news really for the industry, and there's a lot of greyness around that whole concept of prop firms that use that sell CFD trading, but in reality it's a demo account. Shane, I mean, you've got a very specific view on prop trading firms, and I mean, I'm probably in your camp with this. I don't think this is a good thing for the industry, and that whole concept of trading on demo is definitely you do lose something, and this is almost like starting to dig into that as being a nail in the coffin potentially.
Yeah, we were always wondering about the actual legalities of prop trading in North America. Now, I don't want to scare anybody because it is a legitimate industry, and there's a lot of great outlets out there that do a lot of great work and fund a lot of great traders. But when we start talking about trading CFDs in the United States, specifically when they're banned, it starts to represent and resemble real gambling. And when you go on top of that with another layer with just a demo account, with no assets really changing hands, really no customer segregated funds to back any of these transactions, there's been a big question about the legalities of it. And one of the things that I would stress, if you're a beginner trader or if you're an intermediate trader, understand the concept of counterparty risk. And it was something that I ran into right when I started with MF Global's meltdown in the futures industry. Always know who you're doing business with. Always figure out if you're secure and safe, and do the best you can to make sure you protect yourself. Always keep your left up. This was something that sucker punched a lot of people, Nick. I'm not sure. I didn't see it coming, but I'm very, very surprised. It really, the ripple that could go through the entire industry. This is big news.
Yeah, it really is big news. I mean, I'm very curious to see in the case of it coming to court, where as customers you legally stand, because obviously you're trading with a brokerage, you have certain rights, and the institutional financial framework in legal terms stands behind you. Now, how is that get dealt in a court of law? Do they see it as the same type of business, or are you actually sort of as a disadvantage because you're not actually executing real trades? But what would you do from here, Connor? What can you do? I mean, aside from just sort of taking regularly, if you're making money in your prop firm, if you're taking money out of that market regularly and then doing regular withdrawals, what can you actually do to protect yourself aside from that?
Yeah, I think when it comes to prop firm trading, I understand the benefits of it. I think it's great personally. I do love it, but people sometimes don't know who they're getting into bed with, and as Shane said, it's about knowing who you're doing business with. And I think there needs to be some sort of education out there that you are trading on a demo account. With the majority of these 95% of these prop firms are all demo account trading, even when you're live. And people don't really understand it. They think they're being funded with real funds, and it's not the case. And people are like, oh, how do they make money then? Well, how do they pay out people? Well, they pay out people from the failed challenges. That's how they get their revenue, because there's a lot of them. And also they've got B-booking, which is essentially a brokerage tactic where all the clients or traders who aren't seen as good traders, they get put in a B-book and they essentially go against the traders. And that honesty needs to be put out there. That doesn't mean you should be put off by it, because I've traded with a prop firm before and I've been paid out fine, and I know it's demo account. But what I would say, number one tip is, if you're going to trade, know it's a demo account, get your profits and get them out straight away and start to build a live trading account on the side. If you start to try and compound it, you're always sort of skeptical to these sorts of risks with these demo prop firm trading firms. So
Yeah. Well, it looks like it's a story that's definitely going to be running certainly for a while, and it's very sad to see that so many people will be going into the weekend particularly angry with what has happened. And I know that we've got some guys in the room that have been affected by this. So all we can hope is that things do get resolved as quickly as possible.
Yeah.
But moving on to the market forecast that we're looking at this week, we're each going to look at a key market for that is going to be in play over the coming week. I'm going to start off and I'm going to look at the Australian dollar. This is a market I've had my eye on for quite a while. I think there's a lot of interesting potential opportunities around the Australian dollar. You can see my chart in front of you here. This is a daily time frame, and it's because of where we sit in the price action. We're just printing at the moment, sort of right in the middle of the support area from October 2022 last year. That key support area from the bottom of the swing low on the 13th of October. We're just sort of like hanging around this area now. Now, there's a lot of downward pressure on the Australian dollar, and it's the fact that we're staying in this area that I think potentially opens the door to some opportunities over the course of the week. Now, on Tuesday, we've got the RBA interest rate announcement. We're not expecting a change. It is expected to be 4.4%, and the market is looking for that to stay as it is. But the RBA does have a tendency this year, at least, to surprise the market on one or two occasions. So there's no question that we can't sort of like say that 4.1% is a done deal at the moment. And there's a lot of high activity from an open interest point of view on the Aussie dollar. I'm a follower of commercial hedging interests. They are net long and they're widening that gap. That puts a lot of downward pressure on the Australian dollar. And what is really super important for this month is that Philip Lowe's governorship of the RBA is coming to a close. His deputy, Michelle Bullock, is taking over, and the market is still trying to figure out what she is going to be like, how she's going to shape the Australian economy. It's going to be really interesting from now up to the run up to Christmas to see how that actually develops and what she does as the governor of the RBA. So that puts a lot of potential volatility and uncertainty around the Australian dollar itself as well. Couple that with the situation that we've got in China. Everything's very, very sensitive to China at the moment. You know, it's not working as well as the Chinese were hoping for. Some of the data has not been that great. There's questions now over their funding of the US bond market and the way that is all working. The property market is not particularly strong at the moment in China as well. Things are not that good. Now, the Australian dollar has a very close economic tie with Australia, and it's sensitive. The Australian dollar is sensitive to that kind of macro news out of China. There's a negative outlook, so therefore that is a good reason to be watching the Aussie dollar over the course of the week. So I'm looking for a break of 64.63, which is the bottom area of this whole support zone here. We've already probed to the bottom of it at the moment. If we then sort of get some sort of a sustained break over the course of the next week or so, I think it opens up the low of from October last year down to 61.69. So we don't know at this stage if that's going to happen, but certainly the Aussie dollar is on my list for next week. Okay, so
yeah, just a few things on that, Aussie. I think that you can't overstate just how much it means to change the garb. When we start talking about a central bank head going out and a new one coming in, anything can really happen. Now, one of the things that these guys don't want to do is they don't want to be an Alan Greenspan.
Yeah.
They do not want to bring in a recession. One of the reasons why Lowe's hitting the bricks is because of that mortgage market there in Australia. He's taken a tremendous amount of heat. The variable rate mortgages have really crippled a lot of folks, and there was a lot of that paper written in Australia. So when we're looking at something like maybe a surprise rate hike, I highly doubt it. I've been looking at the RBA as one of my doves about the last 3 months. I would be shocked if they do anything at all. For me, I would be looking to sell pullbacks here on the weekly chart and potentially get something to the short right up around 65 3/4.
Yeah, there's a lot of downward pressure on it at the moment for sure.
We had a surprise hold last time, wasn't it? You know, the markets were expecting them to hike, and they held. And I think that automatically puts everyone on the defensive because you wouldn't want to be in longs going on the Australian dollar going into that with what happened last month. Because it's quite a surprise that you get a difference in the forecast when it comes to a central bank decision. So interested to see how that one goes. I'd imagine it would be quite volatile anyway because of the surprise of last time. Does that open the door for one more dovish surprise? I mean, surely they're not going to cut, right?
Yeah,
Surely that's too far.
yeah, who knows? Yeah, I mean, there's a lot of people during that Asia Pacific session tend to favor the Australian dollar against the Japanese yen for obvious reasons, because those markets are certainly more active during that time of day. But I do like it against the Australian dollar, against the US dollar. I think the picture is very clear, but we will see how that maps out over the course of the week. But for me, that's my key market over the week. So how about yourself, Shane? What have you got your eye on for this week?
Crypto, I'm looking at Bitcoin. I think that it has had an absolutely huge year. I mean, Bitcoin's back from the dead. We had a pretty good success calling the bottom down around 15,000, 16,517, right in that 78% neighborhood of the massive run up from those all-time highs of 69,000, that pullback. It's been pretty good through 2023. Now, one of the news stories that broke, I guess, when you see this probably yesterday, last Thursday, you'd say, is the stance of Bitcoin going into a formal ETF. And that is absolutely huge, because we've seen numerous court decisions that have gone against the SEC. Gary Gensler's getting beat up a little bit right now by crypto. So what does he do? Thursday, he comes across and delays the applications of BlackRock and Van Eck for their formal ETF Bitcoin offerings. Now, what that would be is an ETF backed by physical Bitcoin. And that's absolutely huge, because number one, it's going to take Bitcoin out of circulation. It's going to put them in vaults somewhere, theoretically a bullish market driver. But more importantly, it's institutional adoption of crypto and of Bitcoin. And anytime you have institutional adoption of any sort of crypto, it really drives market participation. It really drives price action to the bull. So when we start looking at the chart here, it's relatively simple. This is 2023's range right there, January. We've got a nice sort of, I would call that a P formation, a nice run up and some compression over the past 5 months. But 26,000, that area, 26,000, 38% retracement, absolutely huge. I think I'm a bidder here. I really do. I think that this SEC move by delaying these applications for the formal ETF feels desperate. And I don't like calling the government desperate ever. But I think that they're losing the battle here a little bit in crypto.
The strange thing about Gary Gensler is he does seem to sort of like have such a beef about the whole entire crypto space. You honestly think this is potential that the way that they've sort of like had their noses put out of joint with Ripple? Do you really think there is a sense of revenge potentially coming from the SEC and those sort of the big political areas of America wanting to really squash crypto in a meaningful way?
Yeah, it feels like it. It really feels like it. Anytime you come out and you say, okay, fine, well, we're not going to give you a formal Bitcoin ETF this year, that's tit for tat. I don't care what anybody says. They got beat up by Ripple. They come back over and say, okay, fine, then we're not going to do this until next year. 2023 was supposed to be the year of regulation in the crypto sphere. Haven't seen much.
No.
Haven't seen much.
I mean, what do you think, Connor, about, I mean, because like Ripple, really, really leapt off the back of that win against the SEC, but slightly underwhelming, really. Pretty much everything's been rolled back in there. The supply of XRP being dripped still on everybody that's trying to get long the market. Where does crypto as a space go from here, would you say?
So I wasn't totally surprised to see all those gains given back from that huge win that Ripple had, and it was a win, to be fair. And I'm in the same sort of camp as Shane in the fact that if we start to see institutional adoption, that for me has meant I'd maybe start to change my mind on how I felt about crypto over the last couple of years, because I haven't really been an avid buyer and I've not really given it probably much attention at all. But I think if something like that happens and that institutional adoption happens, I think that's when you might see more meaningful moves to the upside, and those people that have held on for a while may start to see some returns. In terms of Bitcoin specifically, it's always that sort of 30,000 mark. I think if we start to see, a breakthrough 30,000 and to consolidate above there, that would be good. And then obviously you've got maybe 20,000 maybe being the floor. I'm not sure. As I say, I'm not a huge believer in it, but if we get institutional adoption behind it, then for me that would probably be enough to change my mind, because I think that's huge, more important than what is the sentiment right now, because crypto is so speculative and it's like based off risk appetite and how the sentiment is on that day, and it's such a speculative vehicle, and I think that gives it definitely more credibility for me anyway.
Yeah, I mean, if we do get huge institutional backing of the crypto space in general, more specifically Bitcoin, there's certainly not enough Bitcoin itself physically to go around. So, it's we're looking at pushing very high prices in very short order if we do. Yeah, interesting to see how that develops over the course of the next couple of months as well as a space. So moving on to yourself, Connor,
Yes.
what is catching your eye in the markets for the coming 5 days?
So I have a general red list in what I trade, and that is sort of GU, EU, gold, the stocks, Bitcoin, and the DXY. So my focus really this week is on dollar-related pairs, particularly euro dollar, that we've got on the screen now. It's a relatively quiet week actually on the US front, which is surprising to say. But there is ISM Services PMI out on Wednesday. So I'm expecting Wednesday, with it being the middle of the week as well, to be a typically volatile day for the US dollar. So we'll be looking for, any figures that we see are above or below 50, indicating expansion, contraction in that sense. Now, in terms of technical price action on euro dollar itself, I think I've lined up a decent piece of analysis. If I just get my drawings up on the chart now, this is basically what I'm looking for. So what I've noticed is on this move to the downside, if you notice that move where we had that new lower low printed, just following market structure, you can see what happened to this RSI indicator at the same time. That suggested to me that this was, well, definitely our bullish RSI divergence, because we've got lower lows on the market, but we've got sort of new highs on the RSI ticking higher. And then we sort of get that first expansive move to the top side where we sort of start to trade and break above some market structures. So for me, that's fairly bullish. And then when I've lowered this down onto the 4-hour time frame, there's this demand zone which I've got, which is a smart money concept, which is in our academy, and it's the last sort of bearish move before you see that impulsive green candle to the top side. That's where the buyers really stepped in here, and we first saw that change of structure. For me, that's an area of interest for me where we could look to buy from, and there's some good risk reward here if I scroll this all the way across. Up here, we've got some liquidity. We've got some imbalance in here as well, where we could target up at 1.09. So for me, I'm actually looking for some dollar weakness into next week, and I'm going to play that with euro strength. And that's I'd say an 80% technical play, to be fair, because I'm not sure how much I agree with it fundamentally, but I can't ignore the price action, a bit like with Crude recently. So yeah, that's what I'm looking for.
Very interesting. Yeah, I've got because my overall view on the euro is bullish overall, particularly going into next year. But I do note that we, on a technical perspective, we're sort of sitting within this channel here. That we've been contained in this channel now, this slightly upward sloping channel since February this year. So it's beautiful the way that has started to form. I just got my eye on that 107.50 area, maybe a tag of there before trade to the upside, but yeah, it's definitely an interesting market for sure. Okay, right, so that's pretty much everything that we are going to look at for this week. It's been a great week in markets so far. Non-farm payroll definitely has given us something to think about. Before we go, gentlemen, have you got any view on that uptick on unemployment? Are we starting to see those interest rate hikes bite into those businesses, and are we starting to see that jobs market finally start to roll over? What do you reckon?
I think the most striking part of the whole report was the downward revision of July's numbers. I sort of rant and raved about it last week, but I mean, these guys are guessing, they're throwing darts at a board, but slowdowns are imminent. How deep do we get into an early 2024 recession? Does the pain just come about 3 months later than we think? I don't know. What do you think?
Well, I think that the data is slowing. I know the data is slow, and we can see that through the data that's come out. I think as long as it's nothing, the drop isn't too steep in the data, I think as long as the Fed continue how they are, which is sort of this data dependent, will go higher for longer, will keep rates as they are. I think that's, I know it's uncertain, but I think the markets seem to quite like that sort of tone. And I think there's a big mistake coming from traders is when the Federal Reserve starts to cut rates because the data has slowed down, and they'll think they're cutting rates just because inflation's falling and they can now bring rates down. I think their interest rate hikes are starting to bite. I think they'll bite now quite hard for the rest of this year. And my selling sign when it comes to the stock market will be when the Federal Reserve actually starts to cut, rather than playing this higher for longer play. I don't think that's doing anything. there's no more hikes that can really be priced in. And I don't think they're going to hike anymore, essentially. And I think when they cut, or if they start to hint that they're cutting, I think we might see some pain, because the only reason they're going to do that, in my books, is because we see a real slowdown in the data. And a slowdown is fundamentally not good for risk assets.
Yeah, I think it sets a good stage, hopefully, for what will be a final decent quarter. It's not been a particularly easy year, as we've sort of seen inflation coming down, rates starting to flatten out, market expectations being sort of pushed from one end to the other, and it's been a bit confusing, with a slight shift in tone from Jackson Hole as well, back into this global China slowdown story. It's definitely going to be an interesting landscape for the next few months. We just had a question on YouTube. Connor, this might be one for you, actually. Can you just give us a quick idea on your thoughts? It says, can we have a quick look at the Nasdaq? Are you able to do that? Just paint out a rough bit of analysis for us on the Nasdaq for the next couple of weeks.
Yeah, it's something on my red list indeed. Let me just quickly get the daily chart up now. The thing for me, where I thought initially we were going to see that move lower in tech stocks in general, was when we got this first sort of close below this 50-day moving average, and you can see we retested it, we went lower, we retested it, we went lower, and we created this huge bearish engulfing candle, and that was off the back of all those Nvidia earnings. Well, in typical Nasdaq style, we're now on a 3-6-day win streak. So I'd say sell this at your peril, and I've learned that the hard way this year, just being honest. However, I would say if you're looking for an area of resistance, you can actually see up here, we've got this market gap area. Okay, so I just mark that as an FVG. It's a fair value gap where the market jumped lower. There's two really clean trade ideas for me here. We either see a reaction on a lower time frame, we can look to trade it down, maybe to fill some of this imbalance we've got in here, this 50-day moving average. Or what may happen, and it wouldn't surprise me, although, yeah, it wouldn't surprise me, is if we break above this fair value gap and we look to tap into that. And then, to be honest, we're probably going to look to go to yearly highs up at 15,900. So there's two scenarios there. We're roughly around that area now. So it's definitely all systems go next week. We can play it both sides. We don't have to have any bias. We see a reaction off the fair value gap, we could look to go short. If we just break straight through it, look for a quick retest and then potentially to go higher up towards those yearly highs. That's my view.
Interesting. Yeah, definitely brave traders on that Nasdaq. One of the thinnest markets I've ever traded. Shane, we've just got one final question in the room. Quick look at crude oil, please, if you don't mind. I don't want to talk about it because I'm so annoyed with crude oil. But yeah, it's not doing what I was thinking, hoping, wanting it to do. But you are the expert when it comes to things like that. So give us your thoughts on crude oil.
Yeah, 2023 for crude oil seasonality, pretty much throw it away. We didn't get the rally in May. Now we're getting a fall rally. We talked a little bit last week about how shorting right in front of those yearly highs was probably a decent idea for a scalp. And you can see right here, we've pushed above those yearly highs, and we are now driving north here on the monthly time frame. We're above 85. So when I start looking at how to trade this thing, if you didn't get the scalp right in front of 85, that's okay. Now we're looking to buy pullbacks. For me, there's no reason to fight with the technicals here. It's bullish, bullish, bullish. Let's go right to the weekly, and you can see exactly what we have right there. Nice run up. There's your pullback, and now we're breaking above that upper Bollinger Band. This is going to be all systems go until proven otherwise. Now, one other thing that you need to watch, and it's very important, understand that your economic calendar isn't necessarily everything when it comes to participation. Today's the first day of the month. Next week, it's guns up. Institutional money's back in the office. We could easily see a big-time correction here, but I don't think so. I think you're going to want to buy pullbacks, wait for today's high, Friday's high, work off of Friday's high, and then look to grab a Fibonacci retracement somewhere in that 4-day bull run. And I think your entry is going to be somewhere around probably 83 and a quarter. I'd be looking to do that early next week, Tuesday.
Crude oil, bullish crude oil.
Unfortunately, but it's got to be about the end of it.
Got to do it.
Well, the supply numbers have absolutely blown this market apart. I mean, we saw just massive draws come in last week. And when we sit around and say, okay, what's going to happen the next week? Labor Day weekend, huge demand. We had a hurricane in the Gulf. Don't be surprised if those supply numbers are horrible again this next week.
Yeah.
We could be in for another week of pain before we see fall seasonality. If you're long crude, I'm sorry to say that.
I know, yeah. Well, I go off the numbers that I see, and they don't agree. But I'm not going to argue with the market. Whenever you're wrong, you step aside, lick your wounds, go back to harbor, rethink, and come back again. And as traders, there's nothing else you can do. There's always another opportunity just around the corner. Right, well, that's it. That's everything we've got for now. So if you are trading this week, then all the best with your trades. If you're interested in coming along to see what we're doing in the trading room every single day, the educational stuff that we've got, the streams, the content, the academy, which goes down so well with so many people that are learning at different stages of their trading career, then please do head on over to howtotrade.com. You can sign up for a free trial and all that kind of thing. It's all on there. Lots of free stuff on the website as well. Come and have a look. Come and say hello, and we will see what we can do for you. Other than that, if you're watching on a Friday, have a good weekend. If you're watching on a Monday, have a great trading week ahead, and we'll talk to you all very, very soon.